Welcome to the Pay Weekly Recap for the week ending June 27th. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel, and the creator of the artificial intelligence behind the predictive AI for dynamic market system. Before we get started, why don't we go through the normal disclosures? Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trade advice. And finally, myself and or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. If you need a couple more moments with the disclosures, please go ahead and pause the video here. Otherwise, we'll get into what's going on in the market. And broadly speaking, what we're seeing in 10-year yield to start, we've seen a lowering of the 10-year yield, drifting down towards 4.28%. It is not particularly significant, but it is important. We are not seeing major signs of inflation, and thus the market is starting to price in that reality that we will start to look at rate cuts in the near future. Now, we've had a lot of inputs overall for the last week. De-escalation between Iran and Israel. We had more concrete resolution between US and China on trade negotiations, and it now looks like the big beautiful bill is going to be moving forward. So all of these fundamental inputs that could potentially derail the market rally seem to be getting behind us. And along with that, we made new highs for the market on Friday. S&P 500 breached the previous high from February 19th and pushed up towards 615. At this point, this is a full breakout with a potential for new bullish behavior. The bear has very little to hang their hats on here as a way to fight this rally. Frankly, I think if we start seeing prices back below the February 19th high, the bear may start to try to get re-engaged. But right now, the bear has been hurting. And every time we seem to stall, the bear gets stopped back out as the market presses to new highs. So overall, bull market condition, very nice setup. And having some of these fundamental inputs behind us that have been potentially fuel for the bear is a very big, strong element for the bull as well as for the technical trader. Having more of a fundamentally driven market can cause a lot of difficulty for the for the technical trader, and now we're moving towards more of a technical trading style, along with earnings coming up again. Similar to the S&P 500, we have the Nasdaq 100 making a new high. So all in all, tech growth pushing to new highs, market pushing to new highs. Generally very bullish setup for the broad market, and this is generally a very nice thing to see for future potential for paid. I will note that the one potential concern I've got is that we do have the RSI back above 70 for both. Sorry, not quite for the S&P 500, but we do have it above 70 for tech. Last time we did that on a rally through some resolution with I believe that was the US-China trade negotiation. We did stall for a bit, pulled back, but that was not with a new high for the year and for all-time highs. So this time may be a little bit different, but it could be the one yellow flag that I see. It's not a red flag by any means. Small caps continue to lag. Small caps are stalled out at the 200-day moving average again. This is actually another big point for small caps. If we can press through this 200-day moving average that provided resistance back in early June, this could set up small caps to start playing some catch-up. Remember that the new high in small caps was made early February, not February 19th, and we are not pressing to new highs quite at this time. So small caps do have resistance above, but value seekers may look into small caps, which are dominated in part by things like financials and healthcare and energies as a way to try to find new value in a broadly bull market. Now, when we get into a situation where buy everything works, that can be again, stall point for the market when everything needs to be bought, much like a low point can often be found when everything needs to be sold. So the fact that we do still have small caps lagging can actually be a bullish indication that there is some opportunity out there for the bull to try to reallocate or shift their portfolio to some other names from a fundamental perspective, from a value perspective, instead of just going heavy growth, heavy tech to push the market to new all-time highs. Now, with these resolutions that are coming through, we do have the VIX dropping down to roughly the lows we've seen of the last 4 months. We are not down to the lows of the last 6 months. We have gotten down closer to 14%. I do expect to see some of those numbers start to come back into play again. The market does remember what happened in April. It does remember what happened in March, but that is becoming a more distant memory as the cause of this volatility in March and April was very focused on US-China trade negotiations and overall tariffs. If that element can get pushed further and further behind us, the market bull gets more and more in charge and the VIX continues to fall. That said, with the VIX falling, leverage is getting cheaper. So if we have a directional bias on the bull side based upon market technicals and the VIX lower, buying outright calls can work that much better. And that does set up a much more exciting period for this week for paid. We didn't have any trades last week due to the market conditions leading in. Now that some of these fundamentals are behind us, we are looking to have two new signals this week on Tuesday morning. So make sure that you're keeping an eye on your inbox on Tuesday morning. And I should note that on Thursday, the exit will be made earlier than on Friday because we do have a long weekend and an early market close on Thursday at 1 p.m. Eastern. In a bull case for our signals, we will look to hold half the positions over the long weekend and trim half on Thursday. So we are in an abbreviated trading week, which does limit the opportunity somewhat from a short-term trading perspective, but it does still generate great opportunity overall. So we are looking to continue to have those trades, maybe a little bit limited with 2 trades this week and potentially more next week if this bull market does continue. And as a reminder, always join us in that live trading room. Morning bell from about 9:15 Eastern until 10:15, 10:30, and then at the close from 3 to 4. Again, we'll have an abbreviated trading room this week because we'll have the morning bell Monday, Tuesday, Wednesday, and just the morning bell on Thursday with the abbreviated market day on Thursday. But you can see that the results really do speak for themselves. We've continued to find great opportunities, both Vlad and myself, talking through ideas. And these are ideas that Vlad is executing for himself in his personal portfolio as we go through the track record here for the live trading room. So you can see just how powerful some of these trade ideas have been and how they can continue to leverage ideas for you if you are looking for something outside of those slower weeks for paid, such as last week. We did have still some great opportunity in there for short-term trading opportunities with spreads for earnings, and as always for directional trend-based trades. So please do make sure you're keeping an eye on that. It is a great opportunity to ask questions from Vlad and I and how we are trading these markets. And again, if you have questions and can't make it into the live trading room, you can always email us. I'm Keith at yellowtunnel.com and Vlad is Vlad at yellowtunnel.com. Looking for a great week of paid trades with new ideas coming this week. I hope you all had a wonderful weekend, and I hope you all have a great 4th of July coming up. Thanks again, everybody.